the 3-day represents an excellent pivot support in this particular situation. Now, again, we want to have stops below this 18-day predicted moving average in this 152.18 area because we really don't want to get caught up in this intraday volatility. However, somebody trading that does not want to risk that much, what you can do here is you can also have your stop just below the 8-day predicted moving average. Now, further point of interest here, we can see we've got $382 in profit. Now, the position size in Forex, this is something that repeatedly comes up in questions that I'm again repeatedly asked. What size of position should I be taking? Well, the reason this is a $50,000 position, or $5 a pip, is because I have approximately $50,000 in my account. So this profit that was not made based on a $2, $3, $4 million trade. This trade was based on a completely unleveraged basis. Now, what I mean by unleveraged is that the broker here, this is a UK platform, by the way, they still offer 200 to 1 leverage. So leverage that I've used here is effectively zero because the position size that I've taken is equivalent to my available capital. Now, if I took a $100,000 position here and I had $50,000 available capital, then my leverage would be 2 to 1. Hopefully everybody understands that. But a lot of people think that, you know, you can go into the Forex market with a few $100s or a few $1,000s, and even doing a $10,000 position at $1 a pip can be very dangerous. So it's good to understand what the leverage requirements are, what works, what doesn't work, and again, that more importantly provides you, if you're doing things on an unleveraged basis, that gives you an enormous amount of staying power. Now, somebody going in here and doing that $50,000 position that has $10,000 in their account, they're effectively leveraged at 5 to 1. So the 5 to 1 leverage in this particular case potentially could be disastrous on a $10,000 account. Right now, this is showing a positive, which is great. But if this trade was 84 pips the other way, you would effectively be down 5% on that trading account. That's dangerous trading. So again, but position size that everybody takes is clearly up to them. I'm just simply pointing out for training purposes a good effective way to try and get some of that leverage out of your trading. Now, by identifying a range like this with using the VantagePoint software, I'm able to capture the majority of this trading range today while still maintaining an unleveraged basis. So if it did go back to this 152.18 area, I have an enormous amount of staying power. So if it went 100 pips against me, I would be essentially less than 1% of the account would be at risk. So it's incredibly important that this is pointed out. Now, that sums up basically our pound dollar and what's been happening with this trade. Now, because, again, we're getting into 925, this is a pre-market open, but it's a pre-market open based on the North American market only, like respecting the fact that the pound trades heavily during the night. It also trades, it's been trading some funny ranges in Asia, which is, you know, about 8 o'clock Eastern Standard Time in the evening. So very interesting what's been happening because I was able to get the price I wanted last night instead of today, which is somewhat rare to be perfectly honest. Now, with our other trading here, we're going to have a look at, we reviewed the pound dollar. That's one of the trades for today. Crude oil was another trade for today. Now, crude oil is sitting around this 83.79 mark. Now, this is not Forex. You can say that this is not Forex related, but in actual fact, it is. Now, the Forex market, you know, has high correlations to futures contracts in the equity markets, the commodity markets. So again, if that crude oil is going to hold at its current price, then this suggests that the U.S. Canadian dollar is going to move lower. So what we're going to do here is we're going to have a quick look at this crude oil contract and see why this was one of the recommended trades. We can see here that we've got our pivot support. We can identify it at 83.51, 84.67, and 84.80 with a close of 84.34. Now, critical, using multiple markets from VantagePoint, I'm able to forecast the one market by seeing if I can forecast another one or basically make a determination of what's going to happen. So looking at this, I can see that this is telling me that the crude oil is going to move lower. Now, using the short-term crossover from VantagePoint, we can see right here that this crossover to the downside that's taken place is a warning sign that I want to wait for this thing to pull back, and then I want to look at potentially buying this. So looking at the medium-term crossover, that has not taken place, and I can pretty much, we're going to check the long-term crossover, but I can tell you, no, of course, it has not. There is no actual sell signal here on crude oil. So with that said, I'm going to hit that. I'm going to apply that to all. And then what we're going to do is we're going to go back here and see what's been happening with the crude oil. 83.35 is the low today. We're currently trading at 83.74. My position is that this is sitting just above pivotal support. So again, 5 contracts. This is a CFD, a cash for difference. Unfortunately, the American clients cannot trade this, but we're going to go ahead and we're just for fun, we're going to enter this while we're doing the presentation. So you can see it's 5 pips, $5 a pip. I'm able to trade crude oil contracts in 1/100 of a cent, the same way I'm trading Forex. I have a substantial profit I've now built up on this Great Britain-US trade that was entered late in the evening last night, 9, 10 o'clock. So I've got some room to move, and I'm going to play both of these positions while we're doing this webinar, and again, for fun. So looking at that crude oil contract, this suggests that short term is going to pull back. That's exactly what's happened based on the short-term crossover from Vantage Point. However, using the program, looking at the medium and long-term crossover, it's saying that crude oil is still on an uptrend. So what this has done is it's allowed me to wait for the market to come to me. When it's come to me, I've then entered into a buy position. So with that said, we're going to go in, look at some more currency pairs here, see what's happening today. The main thing we're going to review here is the US dollar index. If you're trading Forex, guys, you have to pay very, very close attention to the US dollar index. Now, as I've talked about this in this presentation alone and many other presentations, the 3-day crossing over the 8-day and the 18-day is a leading indicator. So clearly, the US dollar coming under pressure. We can see that we've closed here at 80.56. Pivot support, pivot resistance, this is a very difficult call because we're so close to this, and we've got this volatility sitting here. Essentially we're at a crossroads. We're almost where we were last week, but we've extended lower. So let's go in and have a look and see what's happening with the US dollar index. We're going to hit the short-term crossover from Vantage Point. We're going to hit a